Okay, so there is a structural issue with the stock market, and I want to make sure that you are aware of it so that you are not the dumb money. So let's talk about it.
No! God, please, no! 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 No!
This is the Hey Ed YouTube channel. I am your host, moderator, and all-around nice guy, Edward Anderson. I'm not a financial advisor, so do not construe anything that I mention in any of my videos as financial advice. Always do your own research before doing anything with your money. Today it is Sunday, April 20th, so happy Easter to everyone out there. So today I want to make you aware of a specific issue with the stock market and the financial markets in general that you really should be aware of so that you can act on it. And I'm also going to tell you how I am trading this market. So let's get right to it. Okay, so this upcoming week is a very important week in the stock market. We have a ton of very important earnings. Now, as these earnings reports come in, they could be market movers, okay? So it could be a very volatile week. Now, the real big one, in my opinion, for the week is going to be Tesla on Tuesday. That could create some wild moves in the market. So we have an awful lot of pharmaceutical companies and an awful lot of banks. So really, this week is going to be a very fun week. Okay, so speaking of dumb money, okay, so this month, a lot of people have been plowing money into leveraged long ETFs in the face of all of this market volatility. I mean, look at this massive influx into the stock market over this past month. And this is a record influx of money. Now, I promise you that this money is not institutional money. This is you guys, okay? This is retail money. They're plowing the money into these long ETFs, leveraged long ETFs. Now, if you think that you are safe because you put money into an index ETF, so you're automatically diversified, well, let me clue you in on something. You're not as diversified as you think you are. Now, this is why I wanted to do this video, to give you a chance to pause a little bit and think through what you're doing with your money. The truth is that if you are in an index fund, you are not that diversified, okay? There's an awful lot of concentration in the markets right now in just a few very important stocks. Now, here's a chart that gives you an idea of market concentration over the past 100 years. And look what happened there when the concentration gets really high. Look what happened after 1932, after 1939, 64, 73. Right now, our concentration level in a very few handful of stocks is the highest it's ever been. And trust me, the smart money is aware of this. And given the way the market is acting right now, you have a lot of brand name, companies out there warning people of a massive sell-off in the market. But you don't hear about this in the news. Okay, so I alerted you to this double top put in the market back in February, and I drew the line here for you, showing you that the trend has changed, that the trend had been broken. And I screamed at the top of my lungs to you guys the importance of this 42,000 level. I'm looking at the Dow Jones Industrial Average, right? I alerted you to the importance of this $42,000 level. So the technical damage has been done to this market. This market is broken. Yes, we're going to get very impressive rallies along the way, like the rally that we just had here about a week and a half ago. I told you that would happen. So at the risk of repeating myself for the 100th time, this is a trader's market. This is not an investor's market. Investors are going to be very, very frustrated. But traders, look, personally, I am loving this volatility. It creates wonderful trading opportunities. Okay, so a very convincing argument can be made that this market sell-off, this decline that we've had here these past couple of months, can be traced back to one event, which I did cover on my channel. And that was the revelation, the announcement by a Chinese company called DeepSeek. And they announced their competing version of artificial intelligence to compete with ChatGPT. Okay, so ChatGPT, that is an artificial intelligence product by OpenAI. Everybody knows ChatGPT, right? Okay, so now you're thinking, well, Ed, so what? A competing company came out with a competing product against, ChatGPT. Well, here is the thing. They were able to create this competing product in just 2 months for only $6 million. Now, that one single announcement sent shockwaves through the tech industry. Now, the reason why that is significant is because over 30% of the S&P 500 is made up of only 7 stocks. These are the 7 largest tech stocks known as the Magnificent Seven: Apple, Amazon, Alphabet, Tesla, Microsoft, Meta, and Nvidia. And Nvidia is the general in the markets that has led the market down. And the markets, they follow the generals. So when that news came out from DeepSeek, Nvidia sold off and the rest of the market followed. I mean, but listen, that's essentially what's going on here. Nvidia and the other Magnificent Seven stocks led the way up. They really dragged the market along for the ride for the past couple of years. So when Nvidia cracked, the other generals cracked in sympathy, and that creates like a death spiral to the downside. So why did Nvidia crack on this news? Well, artificial intelligence runs on very advanced semiconductor chips. So when the street learned that DeepSeek was able to create a competing platform to ChatGPT, and some argue that it's a better artificial intelligence platform than ChatGPT. And they did it for only $6 million. They did it on the cheap. People are saying, well, why are we spending all this money on these really advanced chips out of Nvidia? Because DeepSeek used the old generation of the Nvidia chips, not the brand new version. So the street is saying, do we really need these brand new Nvidia chips for artificial intelligence? That's the word, that's the fear out there, right? So Nvidia, which supplies the chips upon which artificial intelligence depends, I mean, it's starting to look like their chips are not as necessary as people once thought. And that's exactly what the street is thinking. And I can prove it to you by showing to you what Nvidia did the day that DeepSeek made this announcement. So the day that DeepSeek released their R1 model to compete with ChatGPT, Nvidia went down 18% in one day. 18% for a company the size of Nvidia was massive. They lost over $593 billion in market cap in one day. Okay, that is not just a bad day, okay? That is an historic move. That's one of the largest single day, haircuts of market cap in a stock in history. And what has it been doing since then? Okay, okay, so this was the announcement. So this is what Nvidia has been doing. It had that proverbial dead cat bounce and then been trending downward. Now, I've been alerting you guys on the channel here about the Nvidia options that I've been playing, and I've just been crushing it on these options. And at the end of this video, I'm going to tell you my next play on Nvidia. So stay tuned here. Just bear with me for a minute or two here, okay? Okay, so I'm not the only one making this connection between Nvidia and the markets. I'm in pretty good company, actually. Let me show you a short clip of an interview with Tucker Carlson and the U.S. Treasury Secretary Scott Bessent.
I can tell you that this market decline started with the Chinese AI announcement of DeepSeek.
Right.
So the so-called Mag 7, the tech stocks, had been doing very well for about 18 months, led the market, and I think that there was kind of a real dose of reality in what was going on in AI. And I think U.S. is going to remain the leader in AI, but the AI related stocks started coming down. So like if I were to analyze in my old hat, and this is the only time I'm going to talk about it, my old hat, what's happening with the market, I'd say it's more a Mag 7 problem and not a MAGA problem.
Right.
Okay, so note his use of the term structural, okay? So like me, he sees this as a structural issue. And that, again, comes back to concentration. The Magnificent Seven makes up over 30% of the S&P 500. So as they go down, the rest of the market follows, just in sympathy. This is the way markets work. Remember, markets are made up of human beings, so the market is always going to be an emotional place. Emotions are what really drive the markets. And by the way, if you're curious about when NVIDIA's next earnings report comes out, NVIDIA earnings are due out on May 28th. So quite a ways out here. We got, what, about 5 weeks from here? And regardless of whatever level NVIDIA is at on that day, that is going to be a wild day. And it's probably going to affect the markets overall. But that's 5 weeks out from now. Okay, now I want to keep this video short. I got a lot I would love to go over with you guys, but let's kind of cut to the chase a little bit. There are a few other things that I'm really worried about, in this market that I want to make you aware of. The first is the housing industry. The Dow Home Builders Index, this is the weekly chart, right? Look at this chart. Put in a head and shoulders pattern. It just broke an important support level, and it's heading downwards. So The housing industry, really is reflective of the really underlying strength of the overall economy, particularly in consumer confidence. And one of the drags on the economy and the overall, consumer confidence level out there is the Federal Reserve. The Federal Reserve, my feelings of the Federal Reserve. As far as I'm concerned, it's a criminal outfit. They are a price-fixing cabal, and they're a counterfeiting operation. Okay, that's what QE is. Okay, that's counterfeiting. Okay, and Donald Trump has made no bones about the fact that he does not like Jerome Powell. Okay, there is a real feud between those two guys, and Powell is not in the mood to do any favors for Donald Trump. But when Jerome Powell was asked if the Fed would step in to support a falling market, he said, no, I think the market is functioning as it should, even with the uncertainties. Translation, no bailout is coming. Okay, so let's finish this off with what my next trade is going to be, okay? I alerted you to the previous trades I did on Nvidia. I had a wonderful, just amazing success with it. And I'm looking to play it again. Now, I'm going to play it through options because I get more bang for my buck. Now, again, this is not advice, okay? I'm just sharing with you what I'm planning on doing. I bought calls here on this day on this nasty sell-off, did really well on them. Then I bought some puts, did really well on them. Then I bought puts again and did really well on them. This has been a really fun trading market. And yes, Nvidia is my preferred way of playing the volatility in the markets. Now, the magic number on Nvidia is 100. If it cracks 100 again, I think it's going to see 90 pretty quickly. Then at 90, it's going to have some defense, and then it's going to sell off. So what I'm hoping here is that this 100 is defended for a couple of days. I'd like to get this up a little bit more so that I can get my options at a cheaper price. Then I will probably buy the 105 puts, and I want to give myself a solid month, maybe even month and a half on the options. I'm going to pay those options for the quick trade, but the real easy money for me would be if one of two things happen. If Nvidia could have a rally for some reason up to this 110 area, then I will lean into the puts pretty aggressively. Because so much technical damage has been done on Nvidia, I just don't think that these levels have a real good chance of being taken out. So if I buy puts, the odds will be in my favor to the downside. That's the way I'm playing it. Now, the other option would be just wait for the carnage to happen. Let it sell off like it did back here when it got down, under 90. Let that happen again, and then play the rubber band effect for a quick trade. Okay, so in terms of being the dumb money, okay, listen, don't think that just because you're an index fund that you're automatically diversified. I just demonstrated to you how you are not diversified. Be a little bit more proactive in your trading and your investing. Use those stops, pick your entry points. And if you don't want to bother trading actively, I've got programs I can refer you to that will do the trading for you. Programs that I'm using that my Hey and What's Up group are in, and we're doing really, really well on them. So if you want to learn about them, shoot me an email and I'll fill you in on what they are. For now, please help support my channel by hitting that like and subscribe button and hit that notification bell. Ed Anderson, live from Minnesota, signing out.
Copy that.